Hi everyone, today's topic is going to be very boring. It's on Singapore income tax. So some of my viewers mentioned that they want to find out more about Singapore income tax and then what exactly it is, and then like additional info that most people want to know. I mean, not really, maybe most people want to know. So it will be like an introductory session to tax maybe. Yeah, so yeah, I got most of this data on slides from my existing lecture notes. So if it's very boring, maybe you can do it at a faster speed. I mean, in the lecture theater, you can't fast forward the professor, right? But now you can fast forward me. Okay, so let's go. Okay, so quick overview first. Firstly, Singapore income tax is progressive, meaning the more you earn, the more tax you have to pay. So like let's say I'm earning 20k, maybe I only need to pay tax at 2%. But if I'm earning 200k, maybe I need to pay tax at 20%. Okay, so how it works is that there's a graduated rates whereby it becomes steeper lah. So if your first 20k will tax at lower rates, then your next 20k will tax at a bit higher rate, and higher. It's called progressive income tax. Okay, so for Singapore income tax is only on a territorial basis, meaning it must be arising in Singapore before it's taxed. Whereas in other countries like the US, they tax on a worldwide basis. So even though you are from the US and then you're working in Singapore, they will still tax you in the US. Okay, whereas if you're a Singaporean, you go to other countries to work, Singapore does not tax you on your overseas income earned overseas. Okay, depending on whether you are still a Singapore tax resident lah. But yeah, they only tax on income deemed to be arising in Singapore. Okay, so let's say you have income from overseas. If it's remitted or deemed remitted, okay, so what? Later I explain what is deemed remitted. So if it's for individual, it's generally not taxable lah. So basically, if you earn, you go Malaysia, you earn income and come back to Singapore, then this is deemed remitted, right? You bring back to Singapore, right? So this is actually not taxable, okay? Unless it's incidental to your Singapore employment or business, or is received through a partnership. So you are opening a partnership, limited liability partnership, all those like LLP you see, that's partnership, okay? So what is deemed remitted? So let's say I'm a company and then actually I earn money overseas, like I have some overseas people buying from me, and then I receive money in the overseas bank, and then I actually use this money to go and pay for my other businesses in Singapore lah. But these businesses in Singapore relation, right, is they also have an overseas bank account. So even though this debt, right, is settled overseas, but because this debt originated in Singapore, is counted as deemed remitted. Okay, so like I mentioned, overseas income, if they don't remit it and always keep it outside, never use it to satisfy any debt, it's not considered remitted, and then it will not be taxed. So if you actually remit or deem remit, it's deemed remitted, then it will be taxable. So yeah, then you need to see whether this company is actually a Singapore tax resident. So if it's not a Singapore tax resident, no double tax relief is applicable. So the full amount will be taxed at the prevailing corporate tax rate, which is 17%. Okay? Okay, now we move on to this term called the tax resident. So tax resident, or whether you're a Singaporean or not, is very different. It's two different things. Okay? So for tax resident, there's two ways of, there's whether you're as an individual like myself or you are a company, is different ways of determining lah. Okay, so for individuals, there's there's a quantitative way and there's a qualitative way. Okay, so what's the point of being a tax resident? Is to get reliefs and rebates and also get the lower progressive income tax rate lah. So for overseas, for people who are not tax resident, they will get a higher income tax rate. Okay, they won't have this progressive, like first 20k how much, second 20k how much. They don't have this. Okay, so for quantitative, right, never mind, we go for qualitative first. Qualitative, you either a citizen or permanent resident, you can be a tax resident. Okay, so it's a good thing to be a tax resident. Okay, so if you are actually a foreigner, you need to go by this quantitative way. So a quantitative way is at least in Singapore for 183 days in the previous calendar year. So, yep. Then, or stay in Singapore continuously for 3 consecutive years. So, meaning like maybe 2020, 2021, 2022. That is 3 consecutive years. Okay. So, for continuous period, straddling 2 years, total period of stay is at least 183 days. So, let's say 2021 to 2022 until now already 183 days, then I'm a tax resident. But okay, I'm a Singaporean, so technically I qualify under the qualitative anyway lah. So I don't need to do this quantitative. Okay. So you can qualify either by quantitative or qualitative, up to you. Okay, so for corporate, to become a tax resident, you can enjoy unilateral or double tax relief or other tax exemptions. Okay, so what is the condition to become a tax resident? It is it's a question of fact lah, where the management and control is exercised. Okay, so it's defined as making of decisions on strategic matters such as those concerning the company's policy and strategy. I know it sounds very iffy, and it's actually quite hard to tell where the management and control is exercised. So basically, you look at the board of directors meeting, where is it? Is it usually in Singapore? So this is where they, if it's always in Singapore, then they count it as tax resident lah, something like that lah. Okay. Okay, so now we look at what kinds of income are subject to charge. Okay, so the thing is, if it's not considered as income, right, then it's not subject to charge, right? So if it's considered income, it's subject to charge under one of these charges in the Income Tax Act. So under Section 10(1) of the Income Tax Act, the Income Tax Act is something very long that most tax people have to read. I mean, tax professionals. Okay, so under the Section 10 and subsection 1, then you go to individual A, B, C, D. You have all the different charging sections. Okay, so the first charging section is on A. A is for gains or profits from any trade, business, profession, or vocation. Okay, so this means that if you start any business, whether you're a sole proprietor or you do business from home or whatever, all this is chargeable under this Section A. Okay. Then, if you actually work as an employee, you are chargeable under Section B. Section B is gains and profits from employment, including non-cash amounts. Okay. Next, Section C has been removed, so redacted, so we don't need to go through Section C, so we go to Section D. Section D is dividends, interest, and discounts. Okay. Then Section E, we have pension, charge, and annuity. Okay, actually most of them is already exempted. Later I'll go through individually. Okay, rents, Section F, we have rents, royalties, premiums, and other profits arising from property. So actually, these other profits arising from property, right? If you buy and sell properties very frequently, they are going to tax you and they're going to call it an income. Okay, so actually, in Singapore, we don't charge, we don't subject capital gains to income tax. Yeah, we don't have a capital gains tax lah, but if they deem it as income tax instead of capital gain tax, capital gain, then they can actually tax you on the profits that you get from the property lah. So if you're always buying and selling properties, right, beware. Okay, lastly we have Section G, which is any gains or income of gains or profits of income nature. So like whatever not in A, B, D, E or F, right, is now all caught in G. So basically any kind of income, right, is going to catch you in G. Okay, so even if you think you don't fall under A, B, D or E or F, right, too bad, G is going to catch you anyway. Yeah. Okay, so next, another basic thing you need to know is this thing called the basis of assessment. So basis of assessment, as an individual, that's only on a calendar year basis. Okay, what is calendar year basis? So anyway, like year of assessment 2022, we just went through it. It's the basis period for 1 January 2021 to 31st December 2021. So this is calendar basis. Okay. Then if you are looking at non-calendar basis, usually you're not looking at an individual, you're looking at a company. So at a company, you can do it on an accounting year basis. Okay. So if a company is talking about their YA 2022, it can be not ended 31st December 2021. It can be the company's year end is in June, it can be 30th June is the accounting year basis for assessment. Yeah, so depending on whether you're a company or individual, then you need to see. But most companies also nowadays also end on a calendar year basis, so not much difference. Only a few companies usually end in March or June or September. Usually it's this. Others out of this few is usually quite weird. Yeah, judging from like experience. Okay, so now we'll go more in depth into section A. Okay, section A is trade, businesses, profession, or vocation. Okay, so when you're looking at this, you usually need to differentiate between income and actually asset lah. So there's income or capital lah. So what's the difference? Usually you need to look through all these seven properties lah to go through it, whether you determine it as an income or asset. Okay, so I mean, if you know the difference between a tree and a fruit, then you should know lah. So like a tree is the one that can produce the fruit, but fruit technically also can produce a tree, but then it's more like an income rather than a tree lah. Tree is like an enduring thing, whereas a fruit, right, it can like get eaten immediately lah. You can't really eat the tree immediately, right? So that's the like mindset behind it lah. So asset, capital, all this, if it's used to produce income, is considered as capital gains, so it will not be taxable. Whereas it's income, it will be taxable lah. Okay, so whether it can this thing that you have, whether it can provide an enduring benefit, this is one of the properties that differentiate between income or capital. Okay, so like I mentioned, the tree can keep giving you new fruits, but the fruit can maybe only give you one more tree. It cannot give you many new trees, right? So that's the difference lah. So enduring benefit test. Okay, another thing is looking at the subject matter. So like certain types of subject matter are more likely to result in capital or business income. So depends lah. So for example, shares are generally capital unless proven otherwise. So although technically if you buy and sell shares, you do trading of shares, you can earn business income. So yeah, so depending on the actual subject matter. So generally, if a property gives the owner either financial or personal enjoyment simply by owning the property, then it will give rise to capital income upon its sale. So let's say I buy a house, I'm more likely to enjoy just having the house, right, rather than selling it again, right? So house usually is counted as a capital rather than an income, but then of course situations can always prove it otherwise lah. Yeah. Okay, so another area of concern is this thing called the length of ownership. So if you own something for a shorter period of time, it will mean that business income is being earned. So let's say I keep buying and selling my trees, then obviously I'm actually doing a business with my trees ma. I'm not selling the fruits ma, I'm selling the trees. Okay, so length of ownership of your asset. Okay, then frequency of similar transactions. So if you keep doing the same thing, you keep buying and selling properties like I mentioned, right? So it will make it seem like you are conducting a business rather than you are actually getting a capital gain lah. Yeah. Okay, so another thing is supplementary work done on property sold. So those who are actually actively trying to sell, for example, their house, they will be making their house look super nice, that kind of thing, so that they can sell it, right? So if you do a lot of work on this thing, the capital, then it might actually become an income instead. Okay. Another one is circumstances responsible for the sale of property. So maybe it can have unexpected reasons. So let's say maybe I buy a house today, then maybe I need to sell it 2 months later because my family got financial problems. So look at the circumstances. So if the circumstances does not show that I was forced to sell the property to get money, then it can be more of an income. I'm trying to earn income instead of capital gains lah. Yeah. Okay, lastly, we look at the motive or intention at the point of buying the property. Okay, so to conduct, whether it's to conduct business or to earn a capital income. Okay. Yeah, so company tax falls under this category as well. Yeah. Next, we move on to everyone's favorite, which is, I believe, I think 80% of our society or 20% of our society is employees, so they will fall under this category called the employment income types. Okay, so employment income tax, there's two types. One is cash, one is non-cash. So cash is simple things like bonus, salary, allowance, all these are taxable lah. Okay, reimbursements not taxable because reimbursements are actually company expenses that the employees pay on behalf of the companies first, then the company reimburse them. So generally reimbursements are not taxable. Okay, then lastly we have the non-cash benefits. So usually under personal income tax we call these things benefits in kind. Okay, so benefit in kind got many kinds, got accommodation, home leave passage, stock option, company cars, paid holidays by the company, all this. Okay, so everything actually is taxable one. Yeah. Okay, next section, not so often thought of is dividends, interest, and discounts. Okay, so dividends actually they are taxable if dividends are generally exempted for Singapore companies, but they are generally taxable if paid by cooperatives or foreign source dividends derived by individuals through a partnership in Singapore. So if it's a partnership, you're receiving dividends, then it's taxable. Okay, income distribution from REITs is also taxable if derived through partnership or carrying on a trade or business or profession. Okay, so if you're an individual, not through a partnership, not through a trade or business or profession, dividends received by you are exempted. Okay, so if you receive it from a Singapore company that you buy the stock SGX, it's not taxable, it's exempted. Okay, next we move on to interest. So interest is actually taxable for corporates but not taxable for individuals. Okay, so corporates, if they put their money in the bank and earn interest, they are taxed on it. Whereas as an individual, I'm not taxed on it. Okay. Lastly, we have this thing called discount. So if you actually buy those things called the T-bills, treasury bills, right? If you want to buy like say 10k treasury bills, maybe they will sell you at 96k, that kind of thing. So if you are corporate buying this T-bills, right, and you bought it at 96k, and then by the time the T-bills expire, maybe like 6 months later, they pay you this 100k. So the 4k that you earn is accrued on that date and becomes realized, and it will be taxable. So basically they catching the interest part lah. Yeah, they call it as discount. Okay. Next section, we have pensions, charge, and annuity. So for pensions, if it's a government pension, is not taxable. So basically CPF is not taxable. And if your employer is so nice and give you pensions, it's actually taxable. So you need to see when did your employer actually buy this pension scheme. So if they buy the pension scheme after 31st December 1992, which I believe most of us don't really have this kind of pensions, it's actually taxable. Yeah. Okay, next we move on to charge. Charge means alimony lah. Alimony is like husband divorced, then you pay wife, you know. Yeah. So it has been exempt since YA 2012, so no longer taxable, exempt now. Annuity. So annuities are recurrent annual receipts, can be by way of gift, legacy, or insurance annuities. So they are not taxable unless received through trade, business, profession, or partnership. So basically for individuals receiving annuities is not taxable. Okay. Then if the total annuity payout is more than the amount paid by the trade, business, profession, or partnership, the further amount is taxed in full. Okay. This not very important, so don't need to know until so minute. Okay. Next, we move on to section E for rental, royalties, premiums, and other profits from property. Okay, so for rental, obviously it's taxable because all those people deriving rental income, they are usually rich people, so we should tax them. Okay, then rental can be on an individual basis or group basis. So what do I mean by individual and group basis? So let's say you own like 3 properties. Okay, so it can be on assessed as property A, property B, property B, C, all these one by one. So each property can be, some can be loss making, some can be profit making. So only tax on the profit making ones. This is one way. This is called individual. Okay, so let's say all 3 we combine together, we add all the income, we add all the expenses, and then maybe just nice break even, then we tax on the amount. That's called group. Okay, so it can be on an individual basis or group basis. Say for rental, right, there is 2 types of properties for rental lah. Can be a immovable property, can be a movable property. So for immovable property, like really real estate property, is taxed in the country where it's situated in, which means Singapore properties. Okay. Then if you actually rent something to someone, so let's say I rent something to a Malaysian company, then it's actually taxed on where the property is used. So it's not taxable under Singapore rental because I did not use it in Singapore. Okay. Next, we move on to royalties. Okay, so royalties is actually like rental or something. It's just that it's an intangible lah. So use of intellectual properties made by blah 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 are taxable. Okay, so it's taxable unless they qualify for tax concession. Okay. Lastly, we have this thing called the premiums. It's not insurance premiums. It's premiums above the normal rental. So let's say I want to rent this property 2008. Then the landlord say 2008 too cheap. Maybe you pay me a one-time payment. Then I rent you this property at 2008 monthly lah. So this premium that I pay, the one-time payment, is considered as premium. Okay, so this is actually taxable lah. Okay, then other profits from property, like I mentioned, you need to determine whether it's actually considered as income or capital. Then a lot of these cases actually go to court because there are a lot of people who think they can escape tax by like buying and selling properties, but actually most of these cases are caught by the IRAS and then brought to court. Yeah, so it can become a very lengthy issue and most of them actually end up getting taxed lah, I'm telling you. Yeah, so don't think that you can buy and sell property, flip properties like nobody's business and then won't be taxed lah. So other than your property tax, your stamp duties, you still need to pay income tax lah. Yeah, so please factor in income tax if you are doing flipping properties like crazy. Okay, next we move on to section G, which is the catch-all section. So catch-all section will be like technically every single thing you can find. It is actually taxable, like finder's fee, referral fee, commission, trading income. Trading income can be from your stock selling, all these buy and sell options. Trading income. Obviously, if you buy and sell options is trading, right? It's not for capital gain or something, right? So yeah, all these are actually taxable. So if someone pauto you to IRAS, you have to pay fine. Okay? So crypto earn, even all these crypto, if they actually find out and then they have evidence of you evading tax, they can actually tax you. Tuition fees that you get from your tutees, if one day your tutee buay song you, go and report you, you will gonna. Okay? So I understand all these mostly are not taxed now. I mean, not say not taxed, it's like under the table, not taxed. Yeah. But if IRAS wants to tax you, they can. Okay? We'll refer back to income versus capital to determine whether it's an income. Yeah. I believe most people won't fight a lawsuit over these kind of lame small amounts. They will just pay the fine and get on with life. Yeah. Okay, so some examples of exam income. Profits from operation of Singapore ships. So Singapore ships are exempt from income tax. Anything that happens on Singapore ships are exempt. Okay. Death gratuities are exempt as well. So if someone die and pass you inheritance is not taxable. Okay, CPF withdrawals are not taxable. Distribution from registered trusts are not taxable. So someone create a trust and then there's distribution from the trust, it's not taxable. Okay, foreign source dividends received by a resident company. So depends lah whether it falls under this section. Okay, it's not taxable. So gains on disposal of equity investment. So let's say I have a company that actually invest in another company, so means like subsidiary lah. So I suddenly dispose of my subsidiary. Depends on the situation whether I fall under this section 13W, then I can get exemption from income tax. Okay, let's go through this deductions and capital allowances lah. So basically, just now I went through is all the income side. There's also a deduction side. So deduction side is for your expenses, or like you buy an asset. Buy an asset is not under deductions. Buy an asset is under capital allowances. Okay, so for expenses, there's allowable expense and non-allowable expense as well. Yeah, so this might be explained more if I decide to do a video explaining company tax, but as of now, I'm just going to give you a brief, rough idea. Yeah, so for allowable expenses, can be anything like employee salary, that kind of thing. Not allowed expenses can be like private car expenses, so like your employees use their own private car and then you decide to pay them. So this is not allowed to be deducted as an expense. Okay. So things like capital allowances is like maybe you buy a laptop for your employee. This is not a deduction. It has to be counted as a capital allowance. Okay, because technically you're going to use the computer for a few years, right? You're not going to like use it and then throw away, right? Yeah, so it's counted as a capital allowance. Okay. Lastly, we move to this section called the donation section. Okay, so for Singapore, as of now, they give this 250% deduction. Okay, so things like you can donate in cash, you can donate in shares, computers, artifacts, or sculptures, work of art, depending on the individual conditions. Cash is the most easy one. Just donate cash and then the IPC issue you a receipt. They will directly liaise with IRAS telling them that you donated. Yeah, and then it will be deducted in your tax return. Okay. So what are non-tax deductible for donations? If you actually do it for advertising and you do like you advertise extensively with this charity, so it's not tax deductible. That's your advertising expense. Okay, or you do it for foreign charitable purpose. This is not approved donations lah. Yeah. Okay, so now we move on to the different so all the things we talked about just now is all income, right? So income is plus, right? And deduction is like minus, right? So what are these different minus parts? Okay, so minus, how can you reduce your income lah? Your income tax, okay? So the way you can reduce your income tax is either through deductions, reliefs, or rebates. So deduction is actually on taxable income. So directly with the income, if you earn $1,000, then your expense is $100. That's called deduction. So deduction. Then relief is also on the taxable income. So just now remaining we have $900, right? So we have a maybe extra relief for certain, like maybe you're a tax resident, we have this extra relief of maybe another $100. So left $800. Okay, so $800 is your taxable income remaining. So taxable income remaining, you need to times the tax rate, then you get a tax payable. So let's say my tax rate is 17%. So 800 times 17%. Then I make it easy, say $200, left $200. So if you have this thing called the tax rebate, right, is on the tax payable. So the tax payable is $200, right? Then you have a rebate. If a rebate of $100, wow, it's super short already. Okay, so it's like if you have a 15% rebate, it's already $100 off this $200. So original your income was $1,000, right? Then you only need to pay maybe remaining $100, that kind of thing. Yeah, that's like how it works lah. Okay, so to exemplify just now all what I talked about, I will use an individual tax return to exemplify this. Okay, so basically imagine there's this guy who earns 100k in the year of assessment 2019, means financial year ended 2018 lah. Okay, So he earn 100k. Imagine he also do business lah. He go and invest in stocks, tuition, then net of his expenses, like he go and deduct his maybe electricity bills or whatever. He earns 70k lah. Okay, so imagine he go and report to IRAS also. So IRAS will tax him obviously. And then he also have own a property. So total he earn income of $220. Okay, net of expenses already. So all the expenses already included. Okay, or capital allowance also included here already. Then after that, he also made a donation of 25k in that year. He made a donation of 10k in that year. So he will get a 25k tax deduction for donation. Okay, so remaining accessible income will be $195,000. Okay, so let's say he's a Singapore tax resident, you will qualify for all these personal reliefs lah. Okay, so earned income relief is as long as you have an employment or a trade, then you have earned income relief. So $1,000. So maybe he has a spouse, but then his spouse probably working like in Singapore. Your spouse usually working, right? Okay, sorry, this guy is a woman. We are going to claim all the different reliefs that is relating to woman. Okay, so men probably working, right? So no relief for spouse relief. Then maybe imagine she got 3 kids, so each kid is $4,000. 4 times 3 is 12,000. Okay. Then also got the working mother child relief. So for first child 15%, second child 20%, last child 25%. So you add this all up, it will be 60% if I'm not wrong. Is it 60%? Yeah, 60%. So 60% on 195,000. Oh, sorry, 60% on $195,000 will be around this amount. Okay. And then after that, also maybe the parents live together with them, and then got all this relief lah. So add all the relief, right? But okay, we don't go through all the relief lah. So but at the end, we all know for Singapore now, all reliefs are capped at 80k. So basically, we don't need to go and count all the reliefs. Maximum this person can claim is 80k. So he earned 195 minus 80k. I mean, accessible income minus this 80k, his chargeable income becomes 115. So this is not the tax he has to pay. This is the chargeable income. So tax payable on chargeable income will be based on the tax rate table. So you go and multiply first 100k how much, then after remaining 15k times something percent, then you get this amount. Okay. So after you get this amount, then maybe some certain years in 2019, I think we have the personal income tax rebate, maximum is $200. So the rebate is on the tax payable. Okay, so rebate is a very good thing lah. Okay, so rebate on tax payable, then the tax payable becomes 7175. So let's say this person have a parenthood tax rebate. Parenthood tax rebate can always carry forward every year. So technically, this person don't need to pay a single cent of tax if usually female lah, if they have a lot of this kind of parenthood tax rebate, or they have all the personal reliefs and they don't earn that much. Okay, actually 220k is really very astounding already, right? So even at 220k, this woman does not need to pay a single cent of tax. Okay, so yeah, it's great to be a woman for tax. Okay. Yeah, so that's a brief overview of income tax. If you have any questions regarding tax, you can leave your comments down below, but don't make it like super specific, like asking for tax advice. That's not what I'm here to give. I'm going to this is like an educational video, so like for educational purpose. Yeah, so if this video has helped you, please help to like and subscribe. Okay, yeah, that's all for today. Thank you everyone. Bye.